Thank you so much for joining us for this special edition of Bloomberg Daybreak. U.S. markets are closed for the Independence Day holiday. I'm Nathan Hager. Coming up this hour, they correctly predicted the artificial intelligence boom that led to record highs for several tech companies this year. Now they're back to assess whether this high-tech bull has more room to run or whether it's headed into bubble territory. Joining us for the entire hour are Gene Munster, managing partner at Deepwater Asset Management, and Wedbush Securities senior equity research analyst, Dan Ives. Gentlemen, thanks once again for joining us for this special roundtable discussion on all things tech. And Dan, I want to start with you because you really have been out front on the bull case for AI over the last really a couple of years now. So here's what you had to tell us around this time last 4th of July.
In my opinion, it's a fourth industrial revolution that's playing out in front of our eyes. We believe this is the start of a new tech bull market, and which is why we think second half of the year tech could be up, 15, potentially 20% in a much broader rally because of what's happening from a growth perspective. I think it's AI is tip of the iceberg.
And since then, the Magnificent Seven stocks tracked by Bloomberg are up 50% on the total return index.
Way to go, Dan.
Dan, can these mega cap tech names keep up that kind of momentum?
Look, it's 9 p.m. still in this party, this AI party that I believe goes to 4 a.m. I mean, this is the start of a 2-year tech bull cycle because it's something where it's the multiplier. For every dollar spent on an NVIDIA chip, there's an 8 to 10 multiplier across software, across infrastructure, across the rest of tech. That's why this is a 1995 moment, not a 1999 moment. Get out the popcorn. We see the tech bull market continues.
So let's bring you in on this, Gene. Here's what you had to tell us about big tech's potential this time last year.
There's going to be some ebbs and flows in terms of the stocks in the near term, but I think that it will ultimately will comfortably exceed all of the hype. And the hype is just intense. I mean, this universal optimism around it seems hard to believe, but I think there is substance behind it.
1 year later, Gene, is the substance still backing up the hype?
It is, and that's the part that Dan and I keep a close eye on is every quarter. And in the middle of the quarters, tracking how these companies are doing, is it ultimately exceeding, meeting, disappointing to what those bars are? And it's just been exceeding really across the board. NVIDIA's numbers, of course, is the bellwether. Dan talks about the chips piece, that being the front end of it, and then that multiplier effect. But that's where I'm focused heavily on, is just what's going on the hardware side. Micron had exceeded estimates, guided in line for the September quarter, for their August quarter, which in AI world that may be viewed as a slight disappointment, but it did include an acceleration in revenue growth. So it's going from 82 to 90%. So Nathan, this is all intact, and my view that the substance will exceed the hype continues to be confirmed as we progress.
Well, let's talk a little bit more about NVIDIA, because obviously there's been so much attention on the AI chip darling. Dan, you've called Jensen Huang, the CEO, the godfather of AI, but godfathers often have targets on their backs. I mean, how big a target is NVIDIA right now when it comes to the overall chip space?
Look, they're a target, but it's their world and everyone else is paying rent. In terms of where we are, I mean, there are chips, there are GPUs, and we've seen this across the board in our trips to Asia. It's the new oil, the new gold, and at the top of the mountain, it's the godfather of AI, Jensen, NVIDIA, in that Mount Rushmore of AI, along with Nadella and others that want to join. But they're miles ahead of the competition. It'll ebb and flow. A year from now, I think we're looking at $3-4 trillion market caps. Apple, Microsoft, and NVIDIA. And as Gene's talked about throughout the year, it's forest for the trees. You don't get too caught up with sometimes the gyrations week to week, quarter to quarter. It's where this is all going.
Well, we have seen gyrations just in recent weeks since the 10-for-1 stock split for NVIDIA. Gene, where do you see NVIDIA going at this point?
I mean, that's exactly it. This is just gyrations, and it's. I believe it's going higher. I think it could go materially higher, and it comes to a basic question that investors have to ask themselves, and it's: do you believe? If you believe that we're in currently a generative AI inspired world that hasn't really taken impact on most of our lives, but a generative AI inspired world, and if you believe that eventually that leads to artificial general intelligence, which is a light year ahead of generative AI, and if you believe that super intelligence is somewhere on the horizon, 5, 10, 20 years on the horizon, if you believe that is the future, which I hold those, then NVIDIA is going a lot higher. And NVIDIA, if AI works, NVIDIA has to work.
Speaking with Gene Munster, the managing partner at Deepwater Asset Management, and Dan Ives, a senior equity research analyst at Wedbush Securities, joining us in studio. Gene is joining us via Zoom. Dan, where do you see the trajectory for NVIDIA? I mean, you've talked a lot about how the run seems like it has legs. What turns NVIDIA from the kind of growth that we've seen over the last several months to something of more stability?
I mean, the use cases are just starting. So when you look at numbers, the street is still behind where the demand and where numbers actually go. So we could go through intra-quarter people saying it's hype and stocks sell off, but it all comes down to demand. And we are still from a baseball perspective, we're in the top of the second, bottom of the first, in terms of where this is all heading. And they're the only show in town in terms of those chips. That's why I believe this is one where they continue to defy, show numbers that I think are jaw droppers, and now the second, third, fourth derivatives hit across the rest of tech.
But when it comes to that demand piece, Gene, I mean, can NVIDIA meet the kind of demand that we've seen from a lot of its enterprise customers? Can the suppliers that NVIDIA relies on meet that kind of demand?
The best thing, simple answer is no, because everything that Dan's talking about, that this early innings and we're just starting to build this infrastructure, despite the breathtaking growth that NVIDIA has had, we're just still early. And we're going to see a whole new class. It has been the hyperscalers. We're going to see a whole new class of enterprisers. There'll be industrial AI. There'll be sovereign AI from countries. And so they will start to be buying these chips. And ultimately, I think it will be very difficult for TSM to keep up with NVIDIA's demand. It's a great thing for investors because, of course, when they have good numbers and they say, we can't keep up, that allows investors to kind of continue to maintain a lot of their optimism. And so I think it's actually okay that it'll be fine for the stocks that NVIDIA can't keep up with this demand. And I had a question for Dan. And
Sure.
When I think about this kind of evolution and what's going on now is generative AI, and then how would I describe there's a light year gap between generative AI and general intelligence? Because this is where you and I, we're focused. Yeah. The reason why we're not worried about quarters is we're thinking 2-3 years down the road. And how do you think about that piece of it? The general intelligence piece of it relative, or just in terms of the applications that could present themselves and the opportunity for wealth creation around that?
Yeah, it's a great question. And look, Gene, I think from everything, all the work we've done around the world, we think about 60% of data that's never been able to be cracked or used by enterprises and ultimately by consumers is now going to get unlocked. And you're going to have on the consumer side hundreds of apps, a lot of them through Apple, that is how most consumers are going to interact with AI in a way that they couldn't even imagine today. Enterprises, same thing. As much as it's scary, sci-fi, 21st century, I think the reality is that enterprises are finding massive use cases, ROI, and that's why we believe there's a lot of these companies, $10 in earnings could be 14 to 15.
In terms of the advances that we could see. It raises a lot of questions when you talk about a leap from the kind of large language models that we're seeing now to this general intelligence. It raises the questions about whether artificial intelligence is advancing too fast for companies and people to keep up with, the moral questions as well. I wonder how, Gene, you think about some of those questions as a lot of these big tech companies do try to get to some of these massive leaps that used to be science fiction, but do seem like they're becoming that much closer to science fact.
Yeah, the numbers are supporting it just in terms of the breathtaking expansion and intelligence of these models. Just to put some perspective around it, OpenAI GPT-3 had about 120 billion parameters. They haven't given the numbers for 4.0, but it's estimated to be about 1 trillion. And that's kind of a simple way to think about how smart the model is to look at the number of parameters. And so think of this as it's over a period of a year, it's getting going almost a 10x improvement in intelligence. So these are kind of growth curves that are that just we haven't seen. Makes the internet growth look JV. And I think when it comes to the positives, Dan and I have talked about the benefits for companies to continue to build into this. And I think I appreciate your point about how can this be, what are the negative sides? And I would just, my view is this: you can debate a lot of angles around how can this be negative or positive. I think the one piece that cannot be debated is it's going to get harder for people to distinguish what is truth and fiction, and all the ramifications around that. I think you're going to see more tribalism. I think people just because you're going to get progressively easier to get fed what you want to hear, and so I think that side's the most actually concerning part of me. When just think about like global stability, is just how AI is going to be used to influence how people think. I'm not worried about robots shooting people up or anything like that. I think this is just about how AI influences how we think.
Now, I want to get deeper into those questions as we get deeper into the program. But Dan, just to close out this segment, I mean, we've seen these massive multiples for NVIDIA and other companies like it in terms of, the levels, the valuations that they're trading at. Is that a new normal, these kinds of massive price to earnings ratios that we're seeing for companies like NVIDIA?
I mean, that's been what we've talked about. It's a new norm. I think how many have missed this, they go back to their historical DCF spreadsheets while they're in their hibernation mode as bears. It's a new era.
And we'll continue this roundtable discussion with Dan Ives of Wedbush and Gene Munster of Deepwater Asset as this special 4th of July edition of Bloomberg Daybreak continues. It's 20 minutes past the hour. I'm Nathan Hager, and this is Bloomberg. Welcome back to this special edition of Bloomberg Daybreak. I'm Nathan Hager. U.S. markets are closed for the 4th of July, but we're breaking out the fireworks for a high-tech power hour. We're back with Dan Ives, Senior Equity Research Analyst at Wedbush Securities, and Deepwater Asset Management's Managing Partner, Gene Munster. And guys, we've been talking a lot about NVIDIA for obvious reasons. I want to get into some other names, though, with exposure to the AI space. There has been a lot of talk about Tesla as a potential AI play. Dan, I know you've been bullish on this stock for quite some time. How important is artificial intelligence going to be, though, when it comes to Tesla's longer-term growth?
It's the linchpin to the bull case, because I've never viewed Tesla as an auto company, as a car company. I view it as disruptive tech. And when we think about autonomous and FSD, even with some of the things that are happening in China, the next 5, 8, 10 years, the biggest bull case for Tesla is, I could argue, it's probably the most undervalued AI name in the market relative to use cases. That's what we're focused on. It's very easy to focus on, okay, they missed deliveries by X amount. That's forest to the trees. We're focused on AI, FSD, autonomous. And I know Gene does a ton of work here, a ton of great work in terms of autonomous FSD. And I think this, to me, is it's really going to be a transformation that we see in the auto industry.
Well, Gene, is that central to how you see Tesla right now? I mean, there have been a lot of promises over the years from Elon Musk about how the data that Tesla's been able to collect from drivers over the years is going to feed into artificial intelligence potentially. Do you see that paying off anytime soon?
I do. I think what's going to pay off faster than what people expect. I think we're going to have a GPT moment when it comes to autonomy. And you look at the broader auto space, this has kind of been a surprising year where there's been more investment. Late last year, we saw companies paring back, some of the big auto paring back in their investment in autonomy. We've seen more increases this year from some of the traditional ones. But that said, Tesla still is far and above making the most investments in this. And really, as Dan mentioned, this is really the central opportunity to investing in Tesla is around what they're going to do with autonomy and what I think is beyond. So Nathan, I think it's going to come earlier than what we think. My prediction is that if you're probably 7-8 years old today, you're never going to have the need to drive a car. So I think within the next 5 years, I think it could be as early as 2 or 3 years. The legislation piece is going to be the big one holding this up. And then one other piece to the Tesla AI story. We're going to hear more about it, obviously, on August 8th when they show their 3 new vehicles, and FSD is going to be a big part of that lineup. But the one other piece is related to Optimus. And it's almost like, I don't know how you feel about this, Dan, about when you talk about Optimus with investors, it is, if there's a sense like, you almost lose credibility to say that it has real potential because it just seems so far down the road. If something good happens in Optimus, the stock doesn't move. But I think that's another big piece. I love your take, Dan, just on like, is Optimus something that investors should care about today?
Yeah, exactly. Gene's point. Like, if I bring that up in an investor meeting, it's like the laughter just starts.
Well,
like,
I mean,
how could you even talk about that?
Yeah, I mean, because a lot of the thing is that, there have been a lot of promises over the years from Elon Musk that autonomous is going to pay off. There's going to be a robo-taxi. Obviously, there's the August 8th unveil that we're expecting, but there's been a lot of expectation over the years and not as much payoff, arguably, that many investors might be looking for.
But I'd agree, but also disagree. Because the point is, there was a point where if you said Tesla's going to be producing 1 million units per year.
Exactly.
Gene remembers, they'd be like, wow,
yeah,
you must have drank a lot of rosé or had a good Friday night. And now we're close to 2 million. And look at profitability. Today, how much free cash flow they generate relative to when they were losing money.
Now, you could argue that maybe I'm looking at the trees for the forest here, but, there has been some reporting from Bloomberg Green in recent weeks that Tesla looks like it's on track to lose, something that's been a bragging point for several years, its electric vehicle market majority in the U.S. Gene, just to that point about Tesla as its, base business of electric vehicle manufacture, how much is it at risk of letting the competition eat into its market share?
I think competition's in a much worse spot than people understand right now. And I mentioned some of the step forwards that some of these traditional autos have made around FSD in the past 6 months. But if you look at collectively what they've done over the past year, absent what Volkswagen's recent investment in Rivian, they've taken 5 steps back. They want to largely protect their gas business. And making an electric car is different than making a gas car. Mm-hmm. This is the difference between making a lawnmower and a supercomputer. And I think that what you will see is, even though there's been some improvements in market share here and there, their ability to scale at a profitable rate is going to be challenging. And ultimately, I think it's a catch-22. I think Tesla is going to end up with 20-25% market share of cars in the U.S. It's down from where it's at today, but that is unprecedented in kind of market share. 1 in 4 cars to be Tesla. But I think the reason why is it will be the best car for the best price, given the features, and I don't think other car companies are going to be able to largely keep up.
You're talking about total market share, not just EVs.
Total market share, correct. I think that 20-25% is... I'm talking 10 years down the road here, but I think that is something, again, because they can scale at a profitable way. The consumer brand matters in cars a lot, but ultimately they want the best value.
We're speaking with Gene Munster of Deepwater Asset Management and Dan Ives of Wedbush Securities. And just to wrap things up a little bit on Tesla, Dan, do you feel like the company is back on track with Elon Musk after all the rigmarole around X, formerly Twitter, the pay package, the reincorporation, all those questions that went Elon Musk's way? Is Elon Musk still the guy for this company?
I mean, look, Tesla is Musk, Musk is Tesla. So that's why everything that, in terms of that twilight zone that we saw in Delaware with the comp package, even though shareholders approved it, the point is that we're not talking about Tesla being a $2 trillion market cap without Musk. I mean, you're talking about what I'd argue modern day Albert Einstein. Of course, has flaws, has issues. We all know it in terms of what comes with Musk. But when you look at autonomous, you look at when you actually go through the factories, when you go through Austin, you go through Fremont, you're in Nevada and you see the actual battery factory, you go to China, you have a different perspective of what they've been able to do. And then you look at all these other EV players that have fallen. It's a graveyard because they talk a game, big game. But as Gene said perfectly, the reality is so much more difficult. And I think even in Detroit, they figured out with Mary and what Farley's seen as well, how hard it is to produce EVs profitably.
I want to shift to another company that both of you follow very closely. That is Apple. And just to stick with the artificial intelligence theme as well, we've got Apple Intelligence rolled out at the latest Worldwide Developers Conference. Gene, I know you follow this company very closely. Is Apple back on track when it comes to AI?
They are, and this is just going to be the sleeper AI story of the next 3 to 5 years. And the AI piece isn't going to start impacting, probably start until the December quarter. The street's having some nice improvements, going from 3, 4, 5% year-over-year revenue growth in the next few quarters, 7% next year. I think that number is going to be closer to 10% plus revenue growth for 2020, for calendar 25. So I think that effectively, and Dan, I've seen your work on this. I think you've been just spot on. Just this is the best consumer-facing AI company. I think that's the language that you've used. I agree with that. I think that when you think about AI, a lot of the attention goes to NVIDIA kind of on the build side. But when it comes to consumer AI, Apple is best positioned, I think, to bring hardware, software, services. It's their taglines, but it's true too. Nobody brings it together better. What that means is the average person who today has little exposure to AI will have a lot of exposure as this gets weaved into the fabric of Apple's products, and that's a revenue opportunity for Apple.
And I'd say that was a drop the mic type, what Gene just said. And I know Gene talks about like 20%, right? Gene, like 20% of the world, like consumers, will interact with AI through Apple, through an Apple device. And it's so true because when you look at what they did with WWDC, if the initial reaction, remember, moose in the street, they can't see forest through trees, right? They've missed Apple from $500 billion to $3 trillion. They'll miss it $3 to $4 trillion. Oh, I didn't see anything big. Yet, you have savants like Gene, and then I follow in terms of like the way I viewed it being there. I'm like, this is it. Because every consumer AI now goes through Cupertino and Apple. And guess what that means? That's going to be a whole nother renaissance growth in terms of AI-driven upgrade cycle on iPhone, but also services. Those applications, hundreds and hundreds that are going to be built. That's for consumers.
So do you see
how long does it take for, as soon as they turn on Apple Intelligence and these new phones come out, how long does it take for the kind of the word of mouth, like people handing their phones to someone else and showing the generative features on it? How long do you think it takes to start to accelerate the iPhone growth?
Oh, I think it's going to be quick. I think it's actually going to be within the cycle, even going into holiday season. But neither, I'd say what Gene's talking about, let's say me and Gene are at dinner in the 612, okay?
Okay.
We're sitting there, and Gene showed me his new iPhone 16 and all these, and I'm like, oh no, I can't do that if I have an iPhone 14 or an iPhone 13. So this is going to catalyze the beginning of an AI-driven supercycle.
How does that play out into some of Apple's smartphone competitors like Samsung?
Apple plays chess, they play checkers. Because it goes back to 2.2 billion iOS devices, 1.5 billion iPhones. I mean, that's the difference between Apple and everyone else. And I pose a question to Gene. Like, Gene, what's your view of when everyone goes to you or Apple, they're late to the game. Like, they're late on AI. They've missed it. So what would you say to that?
AI hasn't even started. How can you be late to something that hasn't started? And when I now define that is that typical person has probably heard about AI, but actually doesn't use it. The reason why OpenAI is giving away this incredibly intelligent model, probably the world's smartest foundation model for Apple, is because the power of their distribution. And that piece is that is a tsunami that's getting unleashed that Apple has just been waiting to turn on to the market. And so my sense is that time is in Apple's favor. They waited, they put together the right lineup for AI, and now they're going to get a chance for everyday people to experience it.
And we're going to get more into where we are in this artificial intelligence cycle as we wrap up this hour-long Big Tech Roundtable with Gene Munster of Deepwater Asset Management and Dan Ives of Wedbush Securities as this special edition of Bloomberg Daybreak continues. It's 37 minutes past the hour. I'm Nathan Hager, and this is Bloomberg. Welcome back to this special edition of Bloomberg Daybreak. I'm Nathan Hager. U.S. markets are closed for the 4th of July holiday, and it's time to close out this special high-tech roundtable. We have been spending the entire hour with Gene Munster, managing partner at Deepwater Asset Management, and Wedbush Securities senior equity research analyst Dan Ives. And Dan, I want to pick up on a point that Gene made at the end of the last segment that we're still at the start of this artificial intelligence boom, and how can companies be left behind if we're just at the start of it? Do you see companies that could be left behind in the AI boom?
I think many. I mean, I've met with many companies. They'll say AI 30 times in an hour, and I leave the meeting being like, ooh, it's going to be a rough road. So the point is, like, it's about the technology, the software engineers, the install base, your sales execution. I mean, look, if someone told you Dell was an AI play 6 months ago, you say, no way. Look at Oracle. So the stronger are going to get stronger. When the losers are going to be like a lot of the niche players squeezed out of sales cycles, don't have the scale, late to the game, lose software engineers. AI engineers are rare, right, in terms of where we are today. So I do think this is going to be one like strong gets stronger, and that's just a reality.
What do you see things, Gene? Are there companies that could be left behind?
I think that most companies will have a benefit, but yes, there'll be companies that will get left behind. They won't be able to keep up. And I think that what we've seen is that in the hardware world, that is where all the action is today. The software companies, the big software companies are basically flat. They're down a few percent this year, which is remarkable compared to the hardware, which is up, call it average 50%. So I think where the companies get left behind is this up-and-coming class. And at Deepwater, we focus on, we have the benefit of doing both public and private. And on the private side, there is these anointed AI companies. Some of them everyone's heard of, OpenAI and XAI, but there's other ones that people haven't heard of, like Databricks and Anduril. And I think that there is going to be a class that's going to go public in 25, 26, 27 that is going to challenge some of the software companies that have had great businesses for the last 15 years. And so I think I don't have these three companies are going to be at risk, but I would just point out this. I think that the private software opportunity around AI is going to be headlines in 25, 26, and 27.
Speaking of headlines, when we have this kind of massive run in the stocks, in a lot of these companies that we talk about day in and day out, there's been a lot of regulatory scrutiny as well. I'm thinking particularly about a lot of the action that's been happening in the European Union when it comes to Apple, now Meta platforms. Dan, is that a potential risk, potential head risk for some of these companies, the idea of regulatory scrutiny?
Look, I think right now regulatory is in a minivan going 55 miles an hour in the right lane. And in the left lane is the technology in a Bugatti going 100 miles an hour. The point is, regulatory, I view it as more background though. The certainties when you wake up, coffee, you're going to get delayed on some mass transportation, train, plane, and the EU is going to find a big tech player. So the point is, I think the streets almost become immune. And I don't see that it spoils the AI party, which I believe it's still 9 p.m. and it goes to 4 a.m. Gene, do you think Europe just falls so far behind U.S., Asia, other parts of the world because of this regulatory?
I think that at the highest level, yes. I think that their restrictive policies are going to have an impact. You need to be embracing these. And so I do think that there's risk what the EU is doing as risk beyond what the regulators understand. And so my general sense is that they need to make some changes. It's not going to happen. I love your analogy about things you can depend on in life. Yes, the EU going after some big tech company. And I would just add one other piece just around this. It's just a chess match. And the reason why, just to put another point on what Dan said, the reason why investors don't care is because they understand that these big tech companies can find ways to get around any of the regulations, effectively dampening what their potential penalties are. And so I'm more confident that big tech can figure it out and get around these hurdles.
Well, what should investors be worried about when it comes to the growth that we've seen in AI companies, Gene?
Well, this is one of the bizarre parts of this piece, and Dan and I were around during the internet bubble. Mm-hmm. And the analogy, I'd say the thing that when I get asked like what's most concerning, it's around how it's going to impact how we think and how we feel about each other. I talked about that earlier. But from the standpoint of what's concerning to stop this, I think the only things would be something around availability of power and maybe something around Taiwan. But beyond that, this rocket is going to take off. And I always embrace like identifying what the real risk is, and they're pretty distant. This is going to happen.
We're speaking with Gene Munster, Managing Partner, Deepwater Asset Management, and Dan Ives, Senior Equity Research Analyst at Wedbush Securities. You're talking about it as 9 p.m. and a 4 a.m. party, Dan, but do you see any potential risks to the AI run? Could we be driving these companies up into an asset bubble?
I mean, I think there's a 2-year bull cycle. I mean, at points when we get toward 3:30, 4 a.m., there will be issues, especially for ones that don't actually execute. But I see it's an autobahn. We'll have some issues with quarters and air pockets and worries and bears that have been negative on tech for the last, since 2009 come out again saying that this is a bubble. The reality is it's a fourth industrial revolution playing out. And some are going to look at this party from the outside and they'll be like, you know what, I'm just going to eat ice cream in my room. Guess what? Let's meet at 6 a.m. for breakfast. I'll go to the party. They go, and who had the better night? And the point is, I think as it all plays out, that's it. This is a tech bull market. You could deny it. The multiplier impacts just starting with Godfather of AI, Jensen, NVIDIA.
Just to carry over the analogy, what's the risk of a 6 a.m. hangover?
First of all, there's after parties at 5 and 6 a.m. And then even in those, you'll have some that fall by the wayside. But if you focus on the winners and keep the thesis, we're going to be talking about $4 trillion, $5 trillion market caps, NASDAQ 20, 22, 25K over the next 3, 4, 5 years, in my opinion.
Is that something that you agree with, Gene?
Yes. I mean, I like Dan's party analogies much more than my baseball analogies, but I'm at the third inning of this, and we think we're in the early stages of a 3 to 5 year bull market. And don't worry about don't worry about the hangover at this point. I think you just embrace that this is, as the substance will exceed the hype, and we've got some great years ahead of us from the market.
Now, obviously, we've been talking a lot about the Magnificent Seven stocks, NVIDIA leading the way in lots of aspects. But as we close out this hour, guys, let's talk a little bit about some of the names that maybe you'd advise investors to steer clear of entirely. Start with you, Gene.
Well, this is one that I've had talked about in the past. I've been wrong. I'm going to stick with it. It's Netflix. It's a bigger company. It's one that has a benefit to AI, but it's not like a true AI company. It's content. And I think that there's a shift going on in content to the creator economy. Think of it as what's happened in YouTube and TikTok multiplied by many times. And I think Hollywood's going to get disrupted. I think companies like Netflix are going to get disrupted. And I think that it's just not that exciting of a story on top of it.
Interesting. What's your view on where the entertainment industry is going, Dan?
I mean, look, I think you could play the scary sort of angle we saw with some of the Hollywood strikes in terms of how it's going to impact negatively. I actually think it's going to create sub-industries and companies that are massively successful. Streaming, there is a revolution going on. It's content-driven. And you're going to see more and more entertainment companies, applications going to be built on top of watching sports, watching entertainment. You're going to be able to go into a movie, whether it's a Vision Pro or others that you'll be bringing in. The point is, things are going to be happening over the coming years that you never would have imagined today. And there's going to be winners from that and losers. And I think that's something, as it all plays out, that's why you listen to people like Gene, because they don't get nerve on quarters. They don't all of a sudden, like so many others, just follow the herd and go negative. The forest through the trees. That's why if Gene was a pilot, I'd be in 3A drinking Cabernet, feeling pretty comfortable watching Netflix.
Over there in first class, huh? What about winners? Dan Ives, what are your biggest names that you're looking at to really do well in the long term?
I think the Messi of AI, Palantir, front and center. I think names like ServiceNow, Oracle with the renaissance of growth. I look at names like MongoDB, and then of course Microsoft being one of our top picks. I think what's going to happen is in software and even cybersecurity, names like CrowdStrike, Zscaler, or Palo Alto, there's going to be a massive tailwind in terms of these AI-driven workloads as the baton gets handed from semis to software.
Of course, we know your coverage of Apple and some of the other big cap tech names. Gene, what are some of your biggest winners as we think farther ahead into where we could be in this tech cycle?
Apple's going to surprise people over the next few years. I think Tesla is going to surprise people around these variant vehicles that they're going to come up with, and I think there's going to be some legs to Optimus. On the we're also, as I mentioned, spending a lot of time on the private side. I think companies like XAI are going to be one of the anointed foundation models. Databricks, I think, is another company. I mentioned Andro before. This is kind of the future of defense tech. And while those three are difficult to invest in today, they soon, in a matter of a few years, will be public.
Really appreciate having you both on to take this longer-term view and an hour-long roundtable discussion on this massive bull run that we continue to see in the tech space. Thanks to both of you for being with us. Wedbush Securities Senior Equity Research Analyst Dan Ives, along with Gene Munster, Managing Partner at Deepwater Asset Management, spending the entire hour with us on this special edition of Bloomberg Daybreak. We want to thank you as well for taking time out from your Independence Day holiday to get in on this discussion. Hope you have a very happy and safe 4th of July. I'm Nathan Hager, inviting you to stay with us. The day's top stories and global business headlines are coming up right now.